The S&P had another big move today, trading up over 1%, closing at 61.15. We finally broke above this downtrend resistance that we've been bumping up against over the last month, finally breaking out today. Really strong move. Both the gamma exposure and the volume that we see here on our chart has been pointing to this 6100 level as a major level. We continue to see volume coming in at that 6100 strike. Every single time over the last couple of months, we've been seeing volume come in at this 6100 strike. We've seen big moves up into that level, tagging the 6100 strike multiple times. This time was no different. The gamma exposure and the volume both pointing to that level. So the probabilities for this move have been really high, going all the way back to the beginning of February. Now we're looking ahead at higher strikes. We continue to see growth at the 6150 and the 6200 strike. As long as volume continues to pick up at these levels, we think these are the next targets for the market heading into March. Now we are getting to a point where we may see some consolidation, maybe even a little bit of a pullback as we are getting into this major level at 6100. This is also our upper dealer cluster zone, which represents an area where option dealers are going to intensify their selling pressure by selling the underlying security, in this case S&P futures. And so the real question is going to be, will market demand overwhelm option dealers or not? And this is why we watch volume and gamma exposure both to give us an indication of how strong the move could potentially be. Zooming out just a little bit on our chart, we can also see that we are above the zero gamma exposure line. So we are strongly in positive gamma exposure territory. And for anyone who's new to our channel, positive gamma exposure equals buy the dip. This means that we're in an environment where both market participants and option dealers are buying dips. And so as price oscillates and ultimately moves higher, all these dips that you see continue to be bought, and these are areas where put buyers are closing out their put positions, option dealers are buying shares of the underlying security, and then as we move above these large gamma exposure concentrations like we see here at the 6100 and 6115 strike, we'll often see selling pressure come in above those levels. And so of course the market doesn't trade necessarily in a completely flat range all the time, but what ends up happening is we have market participants starting to look forward and up the options chain as they expect price to go higher. And so what we end up seeing is that oscillation move higher as the market breaks out. One of the key features of positive gamma exposure environments is low implied volatility. This is something that can be clearly seen by the VIX. Every time we've spiked above the 20 level on the VIX, vol sellers have come in with a vengeance, hammering the VIX lower, and now here we are back down to the 15 level. This is actually an area where we've seen support over the last couple of months. And so it wouldn't be surprising to see the VIX start to increase, implied volatility start to increase just a little bit. That could give us some of that consolidation or slight retracement that we were discussing here around the 6100 level on the S&P. However, look at the gamma exposure. It is clearly signaling the 15 level is still going to be a strong force for lower volatility. And so as long as we can stay below the 18 level and in positive gamma exposure, our bet is that any dips will be shallow and immediately bought by market participants, leading prices ultimately higher over time. Moving on to the Qs trading above 535 today, really big move. We were highlighting in yesterday's video the importance of this 530 level. This was actually our dealer cluster zone was at the 530 level. It has since moved up to the 535 level. And so it appears to be that the Qs are breaking out. This is something we've been talking about that is necessary for the market to see its next leg higher. We really need mega cap tech. Basically, the big players in the Qs really need to outperform. And so this is a really strong bullish move in our opinion, breaching above the 535 level. And again, as long as we can maintain above the zero gamma level in a positive gamma exposure environment, dips are likely to be bought and prices are likely to move higher. Next, let's take a look at Tesla. Tesla finally getting a little bit of a bounce, closing over 350, up nearly 6% today. So the bounce was pretty strong. And look at just how wide this gamma exposure distribution is, all the way from 300 really up into the 450 level up here at the top. really wide distribution, and this just goes to show the severity of the sell-off over the past month. However, from our standpoint, we see large gamma exposure concentrated at the 350 strike and the 400 strike. So as long as we can maintain above the zero gamma level for another day or two, we're going to potentially be looking at a speculative play in our portfolio targeting this 400 strike into March. We're starting to see volume coming in as well. In fact, we actually saw really strong volume today between 350 and 400, which is a really bullish sign in our opinion. All of this volume in the options market is signaling that market participants have a strong interest at these higher strikes. Next, let's take a look at Nvidia. Nvidia, a really strong move today, trading above 135, up over 3%, basically continuing the bounce that we've seen since the beginning of February. The largest gamma exposure concentration is currently at the 140 strike, and this is our ultimate target here in the next week or so. Volume also very strong between 135 and 140, showing that market participants are still bullish in Nvidia. All of these dips have been getting bought since the beginning of the month, and we've just basically been trending higher over the last 2 weeks. If you recall in our previous videos, we were discussing the importance of breaking out above this 130 level, which we did a few trading sessions ago and have since basically been bouncing off of that 130 level. And so with the gamma exposure growing both at the 150 strike and the 140 strike, we think the odds are for a continuation up into that 140 level. And we actually have an option strategy on in our portfolio targeting a move to that 140 strike. Next, let's take a look at Google. Google having a little bit of a bounce today, but we really need to get above this 190 level. If we just look back to the beginning of the year, this 188 to 190 level has served previously as support multiple times and now is currently a resistance level. And so we need to get above that 190 level. The largest gamma exposure concentration is at 200. This has been the case going back a couple of months, and we took multiple trades aimed at that 200 strike back in January. And so I think for a breakout above 190 could offer a higher probability move back into that 200 strike. We do see continued big volume, over 60,000 contracts today alone traded at that 200 strike. So this is a name that we're watching very closely to potentially put on an option strategy in our portfolio, essentially selling premium at that 200 strike. Next, let's take a look at Palantir. Palantir hanging out just below the 118 level, really blowing past market participants' expectations for this name ever since this low on January 13th. We've nearly doubled now, and we see continued interest at the 120 strike. This has been going on now for a number of weeks as market participants continue to bid up at higher strikes in the options market. This is actually not a name that we've been playing because we're not super comfortable with the risk-reward profile. However, it does seem like the odds for a tag of that 120 strike are increasing. It looks like we may get that either this week or next week. And if you want access to our gamma exposure dashboard, we are currently running a special $300 off our yearly portfolio manager tier subscription. Use code WINTER2025 at checkout. We do have a few spots remaining, so take advantage of that while you can. And we're also rolling out a library of algorithmic trading strategies with full backtest results that you can go in and research and add to your own personal strategy, as well as a number of proprietary technical indicators, all within our dashboard. Members also get access to the premium channels in our community Discord. We've got a ton of great traders in there sharing their own strategies and trade setups. You can also follow along as we trade in our own portfolio with real-time trade ideas and alerts. So you definitely don't want to miss that. Link in the description below. Thanks so much everybody for watching, and we'll see you guys in the next video.